Rand 755 at the moment, slightly stronger than it was on Friday when it went to 768. We've also had the gold price ticking up quite nicely. Is that providing the support to the Rand, or do you think there are other factors driving the currency here?
Stephen, I'm a little bit surprised by market reaction to the G20 meeting. I mean, as far as I'm concerned, from what I can see, they didn't really say anything substantial. They said they're going to reduce deficits and keep the global economy, the recovery going. So I'm a little bit surprised at the kind of reaction we've seen in the markets. I'm certainly surprised at the Rand's reaction. Yes, gold has certainly provided some stimulus and some support as far as the Rand price is concerned. But I think overall, I think we still need to be a little bit cautious, and I think risk aversion is still the way to look at things at the moment.
So do you think that the G20 meeting over the weekend has perhaps boosted sentiment in these markets?
Yeah, I think to the extent that they didn't come out with anything hugely negative, but from my perspective, I don't think they achieved much. They pledged to keep budget deficits under control and to effectively halve the spending by, I think it's 2012, and at the same time try to underpin global growth. And for me, the two statements, they're a wish list rather than something that they're going to do from a concrete basis. Looking forward into the third and fourth quarter, I certainly see some warning signs as far as the global economy is concerned.
What would you have expected to come out of that meeting, or what would you have hoped to have come out of that meeting, David?
Well, I think that's the whole point at the moment. There's very little that the authorities can do, Stephen, at this point in time. You've got a slight divergence of views as far as the US is concerned. They're saying governments need to do more to stimulate the global economy. Europe and others are saying no, it's very dangerous to have all this government spending and ratcheting up these deficits. So we've got that issue, and of course, if it doesn't work, what then is the state of play? How do you then create the stimulus needed for perhaps a double dip recession? And that's the challenge that's facing the authorities at the moment. We've got interest rates at very, very low levels, and of course that underpinned by no inflationary pressure whatsoever globally. But also the market, Greece has taught us a serious lesson about fiscal deficits. So it's very, very hard for financial authorities to do more than they're doing at this point in time, particularly when you've got divergent views between Europe and the US.
David, do you think the risks of a double dip recession are starting to rise at this point?
I certainly think they're growing, Stephen. I think what we're seeing is the end of the stimulus packages that the US has thrown. One must remember they threw a tremendous amount. They had a stimulus in the motor industry. They had a housing stimulus package. Those are all coming to an end now. And we've really seen Europe take up the slack as they've been forced into some measure of, I suppose we could call it quantitative easing, as they've had to purchase bonds to keep that market running stably. And I think it's a bit of a concern to me, and I think the risks of a double dip recession are certainly rising.
Of course, we had that housing data last week, and I think you're referring to that when we had some disappointing numbers coming out. We have, of course, the non-farm payroll data coming out of the US this Friday. I should imagine that's going to be the key focus for the markets as we head through the week.
Absolutely. I mean, the whole point of all of these stimulus packages is to try and get the job creation going, to recoup those lost jobs, those millions upon millions of jobs that were lost worldwide. We must bear in mind that the US unemployment rate went from below 6% to close to 10%, and the recovery hasn't made a dent. Yes, the last number that came out, the absolute number was in the region of 400,000. But a lot of that, a great proportion of that, was as far as temporary jobs is concerned, as far as the American census. So a very, very important number going forward. And I think the market is going to lose some patience if we don't see some jobs growth coming through.
Perhaps looking at the local front, we have a raft of data coming out this week as well. We have the Purchasing Managers Index, trade balance, vehicle sales, money supply and credit numbers as well. What would you be looking for among all of those numbers, and are they potentially Rand sensitive?
Well, I think the SARB's quarterly bulletin said it all last week. The current account or the slightly higher current account deficit is pointing to an economy that is recovering. But we've got a sort of mini situation in South Africa as compared to the rest of the world. We do have some growth coming through, but we're not creating the jobs. In fact, we're losing more and more jobs. That is an issue. And I think that is something that we have to keep note of going forward, because we certainly, with an unemployment rate of upwards of close to 30%, we certainly can't afford to lose any more jobs, and this data is very, very important coming out.
The rand from these levels, David, how would you expect that to react as we head through the week?
Yeah, Stephen, it's hard for me to shake my nervousness as far as the global economy is concerned. I think equities are still going to be soft. I think risk aversion is certainly going to be an issue, and I would be very surprised if the rand tracks stronger from here. So I think that we are still in that range of 750, 770, but I do expect weakening pressure to come forward.
And how about the dollar-euro handle? What's that looking like at the moment, and where would that be going as the week progresses?
Euro has surprised me. It's picked up quite significantly from the lows of below 120 to the dollar. And I think the strength that we've seen was certainly surprised most, and definitely surprised me. I don't see much room for the euro to improve dramatically from here. I think they've still got very serious challenges. We're looking at bond spreads from Spain to France to Belgium to Italy. They're all widening against Germany. And I think the euro has got or Europe has got some serious challenges going forward, and I wouldn't be surprised if we look at 120 in the next couple of weeks.